This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody. Yes, indeed. It is almost a wrap on the second quarter.
On Tuesday.
And the first half.
Almost a wrap on Tuesday.
Almost a wrap on this Tuesday. It is June 30th, 2026. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. So stocks, U.S. stocks, S&P 500, on track to finish their best quarter in 6 years. So take us back to 2020. Chip stocks heading for their best quarter ever. I want to say it like, I'm the Valley girl.
Here's the thing.
What?
It was not a straight road here.
No.
It was one that had many speed bumps.
Good.
It is one that had lots of twists and turns.
Yes.
And if we're going to continue with this painful metaphor,
Yes.
we don't really know the direction the road is going.
No, exactly. So what happens? Just because a second half or, a first half goes one way doesn't mean the second half is going to go the other way. In fact, we've got a market guest who basically says the tailwinds are in the rear view. So looking forward to that conversation. All right, so we're going to focus a lot on that in the next 60 minutes on the first half of 2026. We are going to get into, though, the power of the semiconductor rally. We talk about this nonstop. What we have seen in the stocks in the second quarter, unbelievable.
Yeah, it's been remarkable. I mean, you should have listened to Carol months ago when she said,
I should have bought.
Look at that socks.
Like I was in Vegas, all in on
well,
socks.
Speaking of that, we're taking a peek at rising costs and inflation that are squeezing the U.S. South. So although we are seeing gains in equity markets, we're also seeing rising prices in certain parts of this country. Real political implications for that, too.
It's a really good point. Bloomberg Businessweek Spotlight Series story. We're going to get into that. Plus, the U.S. Supreme Court knocking down a central plank of President Trump's immigration agenda. So, yeah, Supreme Court, they want to go on summer vacation, so they're getting it done.
Wait.
What?
They get vacation the whole summer, too. Okay. All right, it's okay.
You know how it works.
It's okay.
I'm just saying.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Charlie Pellet is holding down the fort. Hey, Charlie.
Thank you very much. Good day to you both. We're looking at a record right now on the Dow Jones Industrial Average. The Dow up 141 points, up by about 0.3%. S&P 500 index, you guys mentioned it, wrapping up the first half, wrapping up the quarter. We're close to a session high on the S&P, up 52 now, 74.93. That represents a gain of 0.7%. Tech is where the action is today. We've got NASDAQ up 1.3%. The NASDAQ 100 index outperforming, up 1.6%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 3.6%. Not all stocks are higher. Dow Transports, by the way, trading lower by 0.9%. All of this with a VIX below 17, a 10-year at 4.40%, and a 2-year 4.12%. Gold is up $15 the ounce. Spot gold now at $4,031, up by about 0.4%. A further retreat for crude, down 1% now, actually down 1.6% on WTI, 69.62 a barrel. Brent below 73, 72.97, down 0.2%. Bitcoin getting lost today. We've got Bitcoin down 3.1% with a $58,000 handle now on Bitcoin. Bottom line, semis outperforming. The stocks, as I mentioned, up by about 3.7%. Among some of those semiconductor names, NVIDIA right now up by 1.8%, Micron up 0.9%, Intel up 7.3%, Qualcomm down by 1.4%, and coming up, the big earnings story after the close of trading is going to be Nike ahead of earnings, Nike up by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet, Tim and Carol. That's a Bloomberg Business Flash.
Just want to point out, in the S&P 500, kind of an even split, 281 names to the downside, 220 to the upside. So it's not like, again, all in the trade.
All right, we got, little under 2 hours to go.
All right. A lot can happen,
I
as
know.
we know. A lot is happening on this Tuesday out of the nation's high court. We're talking about Supreme Court decisions. We do get another one. A divided U.S. Supreme Court upheld the constitutional right of birthright citizenship, rejecting President Trump's planned restrictions. The court saying an executive order under Trump issued couldn't be squared with the Constitution's 14th Amendment, with guarantees citizenship to virtually everyone when born on U.S. soil. And for those who are watching on TV and YouTube, President Trump had some thoughts on that.
Yeah, he did say the Supreme Court upheld birthright citizenship, which is too bad for our country, but we can easily make it up in Congress through legislation with the support of the president that has now been determined during this process. No longer an unwieldy constitutional amendment is necessary. Congress should start today to work on ending expensive and unfair to our country birthright citizenship. They will have my complete and total support. The president saying this a little earlier today.
He did indeed. I got to tell you, we've been yelling across the newsroom to our own June Grasso because she is all over this. She's Bloomberg legal analyst, host of Bloomberg Law. Catch it every weekday at 6 p.m. Wall Street time on Bloomberg Radio. June, a divided U.S. Supreme Court decision. What do we need to know? This was an expected decision?
This was definitely expected. Maybe what's surprising is that there were some justices who actually dissented, because this is, settled law. It's been established in our country. Why are they dissenting?
Yeah.
For the same reason that they dissented in the tariffs decision. I mean, there are at least 2 votes that seem to dissent from anything that has to do with that is contrary to President Trump's agenda. But, it's been accepted that if you're born in this country, if you're born on U.S. soil, you're an American citizen. So this birthright citizenship executive order really took things out of kilter. I mean, it really just is against the principles that we have been established. So that's basically what, Chief Justice Roberts wrote the opinion, and he said the question was whether, whether someone who is born here without American parents is subject to the jurisdiction. Those are the terms. And he said, yes, of course. And the weight of decisions. There's a precedent, a 128-year-old case, a precedent saying that there was someone who was born in the United States to Chinese nationals' parents and left the country and then came back. And so that's when this was established. It's called Wan Kim Ark. And so that is settled law. It's a precedent that they are actually respecting. And the Chief Justice wrote the opinion for the majority. And I have to say, when this first came up, people were in the legal industry were saying, "Well, how do they say that this isn't the case? How do they establish that argument?" And during the oral arguments, Elena Kagan said to the Solicitor General, "Well, you're using arguments like from an oration at President Lincoln's funeral to support your theory." So, I mean, the weight of evidence is in favor of this, and it's not a surprise.
I know we're here to talk about the legal argument with you and what we heard from the Supreme Court, but I got to ask you about what the president said, that we can easily make it up in Congress through legislation, and he says they don't have to do this with a long and unwieldy constitutional amendment. Is there a way to do that?
I don't think so. I mean, I think that if a law comes up that says that you can't do this, that the Supreme Court has just ruled that this is established law. So, I mean, I don't know. I'd have to look into it, but I don't think, and I know that there have been times in the past where they've tried to pass bills like this, but they never got enough votes, because most people in this country accept this as a given fact of what it means to be an American on the 250th anniversary. So I think that it probably would need a constitutional
amendment. Born here, you're a
amendment.
citizen.
It would probably need a constitutional amendment. Yeah, I mean, I have to ask around about that, but I don't think that that a law would be challenged and would pass muster.
But the reason I asked you is because of the legal argument. If the Supreme Court just now comes out and says this, then you can't really create a law that will go against what the Supreme Court has just ruled on.
You can create it, but then it'll be challenged, and
And then the lawyers will continue to make.
Tim Stenovic, never say never. We're living in unusual times.
Really,
Okay, so this one, right? Other rulings, just real quickly, what do we need to know about banning transgender girls and women from competing for their schools on female athletic teams and some other stuff?
Right, so that ban has been upheld, and it was based on Justice Kavanaugh wrote the majority opinion, and he said that states can separate teams based on biological sex. And this is not about biological sex. It's not about gender identity. That was based on it was a constitutional challenge, equal protection challenge, and also based on Title IX, which is a federal civil rights law that bars gender discrimination in schools receiving federal money. And both those, he struck both of those down. He said that, and they use an argument that it is acceptable. It is supportive of the idea that equal play on the field should be without fear of physical injury. And if biological males are being forced to compete against biological males, it's different. So, I mean, it's parsing things in a very specific way. And I spoke to a transgender legal activist today, and they were happy that it didn't go farther than it did, because they could have said, oh, we're going to ban any kind of sports like this, any kind of transgender in sports. And there are states that allow it. So the question is whether those laws are going to be challenged. Trump administration is already challenging school districts that have those kinds of laws. So that might be the next thing. And this is a fight that the transgender rights people have lost time and again since 2020. They really haven't won. And actually, LGBTQ rights, there hasn't been one case since 2020 that upheld LGBTQ rights. So this was, was going down no matter what.
All right, I think we got to leave it there. I know there's more, but we highly recommend everybody check out June's show later on today.
And June, enjoy your vacation now that the Supreme Court is going on vacation.
What am I going to talk about tomorrow? I don't know now.
Be working either. That's how it works, right?
No legal cases ever going on in this litigious society. June Grasso, she is a Bloomberg legal analyst, host of Bloomberg Law. Catch it every weekday at 6 p.m. Wall Street time on Bloomberg Radio. All right, so let's go to what has been quite a market narrative and quite a momentum driver, in particular in the second quarter, Tim.
You're not going to be surprised by this at all if you've been paying attention. We're talking, of course, about semiconductor stocks, heading for their best quarter ever, extending an extraordinary start to the year driven by insatiable demand for AI equipment. But after recent jitters sent the stocks tumbling, investors are wondering how much further can the rally go?
Yeah, let's see what Ian King has to say. He's Bloomberg News U.S. Semiconductor reporter. He is in our Bloomberg News San Francisco bureau. He is always our gut check and reality check when it comes to the semiconductor world. Hey, Ian, it is great, actually, to have you here with Tim and me. Quite a run, quite a bounce back that we have seen in semis. The run, in your view, in the second quarter, is it justified against the backdrop of the fundamentals of these companies? And I think we have to be smart here, right? Because not every semi name is the same.
No, you're absolutely right. We've seen a huge run up overall, but some companies have run up way more than others. And if you look at what that's done for the valuations, then that's clearly something that investors can key upon and decide. At the moment, it looks like we don't really care. You've got a company like Intel, which I believe is the second best performer on the stocks this year, and it's trading at sort of above 500 times, whereas a company like Micron, which I believe is still the best performer this year, is trading, I think, in the 20s. So there doesn't appear to be a huge amount of differentiation between companies that are generating, really good earnings and companies that are still got to prove themselves. Maybe that is how things will pan out as we move forward.
Carol taught me this great function on the terminal at the end of the first year of working together, where you can just look at member ranked returns for certain categories. I just did that for the stocks, Ian. The worst performer so far this year, NVIDIA, only up 6.5%. It's notable given that NVIDIA was kind of the company that, at least for a lot of people, started this all. It was the one that really surged back a few years ago and continued that surge. What has been NVIDIA's challenge this year?
I mean, just reading the reports and talking to investors, there is no problem. There's nothing wrong. The growth that it is showing from an incredibly high level at this point is still there. All of the demand drivers are still in place. It's getting new products out quickly. The new products are doing okay. So in terms of the fundamentals, it doesn't appear to be anything wrong. But what people have told me is that the story has changed. We've switched. Going back maybe 2 years ago, NVIDIA's position was absolutely unchallenged. You could say it's probably not challenged yet, but there is more talk, there's more stories, there's more narrative that's looking at other companies, new offerings that might come in that might begin to steal a little bit of market share from NVIDIA. So that's really what it's facing. It's more of a the story isn't as fresh as it was, rather than there's anything fundamentally wrong.
So, Ian, I had this great teacher, courtesy of Bloomberg, who has taught me about semiconductor cycles and how demand increases, and then you have semiconductors ramp up to meet that demand, and then you have oversupply. That teacher is you. And so I just, dare I say, is something different this time around. Are we seeing the build happen? Or I feel like we've had some conversations around this table with maybe Mandeep Singh, and others, that companies are careful about not overbuilding or building too quickly. But where are we on that?
Yeah, I mean, that's sort of ongoing tension within the industry right now. We have all of this insatiable demand signaling going on, all of this CapEx spending keeps going up, and we're talking hundreds of billions of dollars that's been committed to spending on this gear. So the demand side is absolutely there. So then, well, why isn't supply ramping up to meet that? And primarily that's the memory chip guys. They're the kind of bottleneck at the moment. And the answer to that is they're not stupid. They've seen this movie before. Of course they're going to increase supply. Of course they're going to tell their customers that they're going to increase supply, but they're not going to do it at this kind of reckless breakneck speed that we've seen in the past. I mean, there's only really 3 of them now that matter. So it's very clear who's doing what, and there's no kind of wild cavalry charge into the kind of capacity builds that we've seen in the past. I mean, 3 years ago, these guys were losing money. So there's an element of sort of common sense exerting itself that maybe some of the, the executives running Samsung, running SK Hynix, running Micron, perhaps are wise enough to, that this is perhaps too good to be true. So they're going to be careful. They're not going to get ahead of their skis. So we're seeing that tension right now.
Ian, to Carol's point, you have been doing this and covering this beat for a while. You've seen different cycles. You were actually in Korea years ago covering some of the companies that are now worth upwards of $1 trillion that we've been talking about for the past few months, SK Hynix and the like. I'm curious about not where we are in the cycle, because Carol was asking you about that, but really if there's any historical parallel with the dot-com boom and then bust, than what we saw in the 90s, or maybe even what we saw in the early 2000s. Is there any historical corollary here?
Well, I mean, the corollary will always be that, good times, particularly for the memory chip guys, have always been the herald of doom and gloom and disaster that follows shortly. This time, though, they are actually saying it out loud. They're making that dangerous proclamation that it is different. And it's certainly, we're certainly seeing a new area, the extent that it's happening is enormous. But really, we have to be careful, we have to be clear-eyed, because computing has changed. Computing has found a new form, it's found a new market, but it's still restricted to computing. What we need, I think, for this to gain confidence and gain the sense that, hey, it's going to last longer, is AI to get out there in society, to have more profound impact on the economy. Right now, it's made coding much better. It's made internet search much better. It's made some of the things that we all do on computers on a regular basis easier. But what else has it done? And I think if we saw more signs of that, if we saw more signs of it really getting into new industries, pharmaceutical, for example, then perhaps there'd be more confidence that this isn't just a bigger bubble than we've seen in the past.
Yeah, I feel like it just plays so largely into this whole AI narrative, right? Like, just how big is this going to impact our world? And obviously, that will determine how much we need in terms of semiconductors. You are a great teacher. Ian King, thank you so much. Always, always. Ian King, he's Bloomberg News U.S. Semiconductor reporter. He's out there in San Francisco.
Hey, coming up next, Carol mentioned we're keeping an eye on not just what happened in the second quarter and the first half of the year, but what it portends for the second half of the year. Dan Suzuki is next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing just about at the best level of the day on the S&P 500 index as we wind down the quarter and the first half, with the S&P currently at 74.98, higher by about 0.8%. Again, very close to session highs. The Dow is at a record, up another 150 points now, up by about 0.3%. We've got NASDAQ higher by 373 points. That's a gain of 1.5%. The Nasdaq 100 index outperforming, up by almost 1.7% against the backdrop of the SOX surging by 3.7% and the VIX holding below 17. Your 10-year at 4.41% with the 2-year currently yielding 4.12%. Spot gold is up $16 the ounce to $4,032. The precious metal up by about 0.4%. A retreat for crude holding just above 69 a barrel right now on WTI, down 2.1%. Barrel of Brent 72.86. Brent crude down by 0.4%. Cannot ignore the move lower in Bitcoin today, down now by 2.9%. Bitcoin at 58,499. The U.S. Supreme Court has agreed to hear an appeal by Apple regarding a contempt ruling in its long-running antitrust battle with Fortnite maker Epic Games. Apple shares today higher by 2.5%. Coming up after the close of trading, we'll be hearing from Nike. Nike shares higher now by about 0.2%. Of course, focus is going to be on management's turnaround, China, and tariff refunds. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Yep, we're going to say it a million times today because we're getting ready to wrap up the second quarter and the first half. Chip stocks headed for their best quarter ever. U.S. stocks set to finish their best quarter since 2020. And then there are those sweeping tariffs. Let's not forget about that.
Yeah, those are the underpinning of President Trump's economic policy, and they may have gone from a headwind to a tailwind for the stock market with the Supreme Court's decision to unwind them, setting the stage for a potential earnings boon for at least some companies. I heard Poonam Goyal on Bloomberg Intelligence talking about this for Nike this morning.
Yeah, something to watch out when they report after the close. And we've seen it on some of the earnings reports about money going back from companies to either suppliers or what have you when it comes to tariffs. Our next guest, though, says the tailwinds are in the rear view. Let's bring in Dan Suzuki. He is a global investment strategist at iCapital. It's an end-to-end platform for alternative structured investments and annuities. It has $1.2 trillion in active global platform assets at the end of May. So that's assets moving around the platform and across the platform. He's here in studio. Hello. Good to have you here.
Yeah, thanks for having me.
So good first half.
Absolutely.
Amazing second quarter for a lot of names. Tailwinds are in the rear view. How come?
Well, I think if you look at where we are today, it's hard to argue that things aren't phenomenal, right? I mean, we have the best earnings growth since 2021. You're seeing all these different indicators, like retail sales are double digit. Employment's starting to come back. PMIs are doing really well. So growth is obviously really good, and that's kind of what's been powering the market higher. As we look to the second half, I think the bigger question is, are the growth drivers that drove the first half, are they going to be sustainable into the second half? I think a lot of those are going to be going away. And so it doesn't mean the market can't go up, but there's more risk to that story. And I think it's going to be a little bit choppier.
What are some of those risks to the story?
Right. So, one of the big things is record tax refunds, right? Those are all paid out. And so you get a little bit of a continued boost as those get spent, but that's going away. Part of the big, first half boost was just the fact that we were reopening from the government longest, government shutdown in history last year. You had, the Fed out there doing RMPs and buying treasury bills. You had Fannie and Freddie buying mortgages. And you have AI spending that was, obviously surging. That's continuing, but a lot of these things are going to get a little bit more choppy. And so we look at the second half and there's probably three big risks that, they don't have to happen, but they're the things that you should be monitoring if you're going to be worried about the second half. The first is the fading consumer tailwinds I already kind of alluded to. The second is AI CapEx vigilantes. You're starting to already see that story play out. And then the third would be just sort of a higher for longer interest rate story as it sort of cycles through the economy. So we think that interest rates more likely to be lower than they were from where we were, and inflation should start to come down as it's peaking. But the fact that they're going to still be elevated, I think, listen, credit card delinquencies are basically, 15-year highs. We have a record amount of credit card debt. There's things that we have to consider as you look to the back half because things have been so good.
The credit card debt and the delinquencies. Yeah. Well, let's start just with the debt. Is that inflation adjusted? So, is that a fair way to compare it?
Well, even if you inflation adjust it, it's high. I mean, if you think about why the consumer has been so good, I mean, it doesn't make any sense. We've had real incomes just went negative for the first time in a while. And
because of inflation.
Because of inflation. So you have these headwinds to consumer, yet spending is really strong. Well, how is that? Well, they're drawing down their spending. We saw basically, if you go back in like the 40, 50-year history of savings rates, you don't sustainably come down to these levels where we are today. You did for a few years pre-GFC, but you don't come down here. So they're drawing down to their savings, they're tapping their credit cards, and so that's what's kind of happening here.
Dan, is what really is happening is something we've talked about so much, and that's the K-shaped economy. That
Yes.
the consumers that are feeling the pinch or are facing credit card delinquencies, is it the lower rung of that K? And this is the disconnect we get of people not feeling so great, not doing so well in this economy, and then you have a stock market at record highs because there are those folks at the higher income strata, if you will, who are in the market who are doing well.
100%.
And so when does the problem of those that aren't doing so well kind of play out in the economy? Especially when we talk about the wealthier consumer is really what pushes consumer spending.
Yeah, I mean, Carol, you hit the nail on the head. That's absolutely right. And the problem is that the K-shape is getting wider. And we talk about this in the report in our mid-year outlook, but also, probably the bottom part of that K is growing, right? And so like the concern is that that lower income consumer that's feeling the pain, it's sort of moves up into the middle income consumer, which becomes a bigger part of the pie, right? And one of the things that's fascinating is that when you look at inflation, we talked about inflation. Mm-hmm. Actually, if you're in the highest income part of the consumer, you actually have had deflation over the last few years. So not only has your stock market been going up, but actually the prices of stuff you spend your money on have been coming down. Whereas it's this lower income consumer that's felt the most inflation. The interesting thing is the middle income consumer that we talked about, they're just now moving into that inflationary territory. So that's where they start to feel the pain. And that's one of the concerns. Not that it has to play out as a disaster, but we don't.
But when does it matter? Like, I will be honest with you. I think we've had wealth managers on are like, well, they're not our customers,
Also, they're not the ones driving spending in this country.
Exactly.
That's what they say too.
I'm not trying to be critical, but they're kind of like, well, everybody we're dealing with, they've got lots of money. So I'm like, when does it become a problem in terms of an economy? Certainly it plays out politically.
Well, it's really on the margin, right? I think if you see, like when you look at disposable income I talked about the real disposable income just went negative. Yeah. That's including the wealthy, by the way. So it's like as a whole, the consumer is seeing, and that's not just inflation. Growth for total income is actually slowing, right? So that becomes a bigger headwind for the consumer, especially now that the refunds are paid out. I think that matters today. It doesn't have to be a disaster because the higher income consumer can still spend. But if you think about the starting point, I mentioned credit cards, but pretty much every category outside of mortgages is basically GFC level, delinquencies today.
That's a problem.
Yeah, it is a problem. But to your point, it is concentrated in the lower end. It's the concern is that starts to grow, and not that it's going to collapse things, but on the margin, higher delinquencies and slower growth. That's something that's really not baked into people's expectations.
Can I just ask? But it happens in an inflationary environment, right? Or is it? Or do you anticipate inflation coming down?
Well, so that's the thing is like if inflation, I do think inflation has peaked or is peaking. And a lot of that has to do with sort of the roll through impacts of Iran and oil prices. So as that comes out, inflation is going to come down. The other part of inflation, the other thing that's been driving inflation higher is not just Iran, but the economy. We just talked about how great the economy is. People always forget how cyclical inflation is. And so if on the margin things start to slow, not collapse, but start to slow, and oil prices are coming down, you could actually see inflation come down more than people think by the end of the year. I think it's going to be sticky, but it might come down because people are saying inflation is going to stay high. We're pricing in 1 or 2 hikes by the end of the year. We don't think that's going to happen. In fact, if I had to choose, we think base case no move by the Fed. If I had to choose, I'd say cuts are more likely given what we just talked about.
Yeah.
So then what's the right way to construct a portfolio for what you think this environment will look like?
Well, I think, listen, I'm going to be the 1,000th person that's come on your show this week to say diversification. But diversification matters given what's happening. I mean, you're seeing...
But what type of diversification? Is it asset class diversification? Is it regional diversification? Is it stock size diversification.
Alternative, like where?
Yeah, exactly. At the heart of it, you want sort of factor diversification in the sense that, like, I don't care if you have 1,000 different assets in your portfolio. If they all move just based on AI, that's a problem. That's not diversification. Same thing if they all just move based on oil or interest rates. So that's the type of diversification. But I do think that in order to get that, you need size diversification, you need regional diversification, and I do think that the private markets give you a lot more, a wider of a menu. I mean, most companies in the world and in this country are private companies, right? So you can either go to the public markets, which are more concentrated than they've ever been, or you actually look to the sort of the private markets and alternatives to look for other alternative sources of diversification.
What should realistically be your exposure in private markets at this point, considering some of the private credit concerns that we've had and still questions about disclosure?
Well, that's what people forget.
Transparency.
That's what people forget is like it's like asking how much should your alternatives exposure be is like asking, like, you know, what should your stocks and bonds total allocation be, right? It should be, because basically...
Well, there is a prescription for
60
based on age.
Yeah.
And also,
and
60/40 is classic.
Yeah, it should be based on your risk tolerance. But like, I think what people forget is like, it's not a separate asset class. Equity at the end of the day is equity, and debt at the end of the day is debt. So it doesn't matter if it's public or private equity, you know, like you're owning shares in companies, and if their profits do well.
But it does matter. There's transparency.
The vehicle matters, but like the underlying asset you're buying is still a company, right? Like SpaceX went from being a private company to a public company. At the end of the day, you're an owner, and if SpaceX grows its profits, you're going to benefit from that. If it doesn't, you're not going to do well. So I think, you know, there's benefits. The benefits I see to alternatives are that it's a wider menu that offers more opportunity for diversification, because you talked about private credit, you talked about private equity, but you didn't talk about, you know, infrastructure as an example. You know, infrastructure is very interesting because it's uncorrelated with everything else we talked about, and I think that we're in sort of a structurally higher inflationary environment for the next 10 years, right?
But infrastructure has an AI component. It has an economic component. If it's funded by either federal money or municipalities, like there is a lot.
But this is the opportunity: is that the fiscal budgets can't support the infrastructure you need. That's why the private money is coming in to support the necessary infrastructure. So it is private capital, and there's really good opportunities for income diversification and inflation protection that you're not getting from any of these other asset classes.
So you're not going to say 10%, 30%, 40%. You're not going to say 50%.
I think again, there's a prescription for every person.
There is indeed. All right, this was fun, Dan. Thank you.
Thank you, guys.
Dan Suzuki, global investment strategist at iCapital.
Hey, when we come back, the Southern squeeze: how rising costs and inflation are squeezing cities like Nashville and others, and also the political implications for that. That's coming up next on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got 1 hour, 20 minutes to go until we wrap up the first half, until we wrap up the quarter. And right now we do have the Dow trading at a record. The S&P 500 index holding close to session highs. We begin there with the S&P at 74.95, up 55 now, up 0.7%. Dow Industrials at 52,320 on the Dow. Gain there of 137 points, up 0.3%. NASDAQ is up 1.3%. The NASDAQ 100 index, the outperformer, up 1.6%. This with the SOX higher now by 3.9%. That is the Philadelphia Stock Exchange's Semiconductor Index. The VIX below 17, and a 10-year currently yielding 4.41%. The 2-year 4.12%. Gold is up $13 the ounce to $4,029, up 0.3%. A retreat for crude oil. West Texas Intermediate down 1.4%. WTI 69.75 a barrel. Brent just below 73 right now, down 0.3%. Bitcoin now looking at a 3% drop there. Bitcoin at 58,330. Chip stocks heading for their best quarter ever, driven by demand for AI equipment. Investors wondering, however, just how much further the rally can go. Among selected chip names, we do have NVIDIA up 1.8% right now. Qualcomm down 1.5%. Intel up by 6.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Tim and Carol. That is a Bloomberg Business Flash.
All right, the amazing Charlie Pellet. Thank you so much, Charlie. Hey, we want to get to one of our spotlight stories today. Bloomberg Businessweek highlighting what is known, Tim, as the Southern Squeeze.
Look, just ask those living in Nashville. For decades, Tennessee, along with other southern states, Florida, Georgia, North Carolina, South Carolina, they really stood out for their affordability. I mean, Carol, how many members of your family have moved from the Northeast to
Southeast?
One of those states.
Yeah, exactly. And a lot of it's about getting away from higher costs, getting away from taxes, lower housing costs, although they have seen some numbers go up.
Yeah, it's drawn a steady influx of American retirees and also black professionals from some of the highest cost parts of the country. That is changing, though.
It is indeed. With more on this, we head to another southern city, Atlanta, and to Bloomberg News Atlanta Bureau Chief. He is Brett Pulley. Hey, Brett, so glad we could bring everybody your story. First of all, let's take a step back. Talk about the migration. I've seen it in my own family, people moving down south. What's been going on, and why have so many moved?
Sure. Well, it's something that has been going on perhaps for some time in some of these big metro areas in the South, such as Atlanta or Nashville. But we've really seen it pick up, I think, post-pandemic, as people gravitated to so many of these Sun Belt states and cities. And what's happened is tremendously fast growth. And along with that has come some tremendous benefits. As you mentioned in Nashville, for example, Starbucks, they're in the process of moving thousands of employees there. Oracle is in the process of moving like 8,500 employees there by 2031. This big new Tennessee Titans Stadium is being built. So there's tremendous economic development, and along with that is going this rapidly increasing cost of living in those areas. Houses have gone up since 2019 like 60%. And so wages are not keeping up with that, despite these new professional jobs, particularly for that homegrown traditional population that's there, or those people who migrated many years ago. They're finding themselves increasingly squeezed as their wages don't keep up with the fast rising cost of living.
So what are the economic implications of that? Because if you think about it from the perspective of, a company like Oracle and a company like Starbucks, which you just highlighted and you highlight in the piece among other companies, they're seeing these as attractive places to live because the cost of living is lower. But if you just think about this from the supply and demand perspective, I mean, economics 101, it doesn't stay like that forever. When more people go to a certain place or more people start buying something, costs go up as a result of that demand increasing. What are the overall economic implications of the higher costs in some of these areas, Brett?
Yeah, I mean, I think one of the things that they're seeing happening is kind of mirrors really to some extent, Tim, what we're seeing in the national economy at large. And that is this increasing need to cater to the luxury consumer, right? This increasing need to sort of go where the money is, right? Fish where the fish are. And in these cities, like we zoom in on Nashville, and there are these areas where there's now, there are these, there's a luxury Soho house and an Hermes store, and these wonderful outposts of, New York restaurants, et cetera. And we've seen the same thing in some areas of Atlanta as well. Midtown Manhattan, Midtown Atlanta sort of has grown in the same way the last 5, 6, 7 years. But then there's this struggle to have a critical mass of consumers who can immediately support these fast rising rent prices, these prices on property taxes, and go luxury, so to speak. As one person who we spoke to said, not everyone is going to be luxury. That's part of this challenge we're sort of facing in this economy, I think, and I think they're seeing it play out in these fast-growing southern cities.
There's a quote in the story, and it says, this is an economist at the Urban Institute, a think tank in Washington, D.C., and Gregory Axon, he says, you have a lot of people who are not poor. They can pay the rent, they can pay the utilities, but they struggle to save for the future. Brett, I think about a conversation we just had with someone who watches the markets and works with a lot of institutional investors. But this whole idea that you are creating, I don't know whether we call it a middle class, people who make a decent living and are paying for a lot of things, but they're not in a great position. And I do wonder how that continues to impact kind of the nation overall, both economically and politically.
No, absolutely. And I think some of these southern cities will shine a light on that. One of the things that we talk to people about is how this is making them feel during this midterm election cycle. And what we found from talking to people in Nashville and Atlanta, that people are certainly very focused on the midterm and whether or not indeed there's an opportunity to perhaps switch directions or change what they think is their personal lot at this time.
Yeah, I think about the impact on small business too, right? If you're not got a corporation behind you or private equity, which you also include in this story, you know, Tim, that's a problem.
Yeah, Brett, we talked last week a little bit about the challenges facing Florida's job market too, and the unemployment rate in Florida, which is higher than the rest of the country right now, which I think is surprising to a lot of people who have heard that Florida is a place that people are moving to and have been moving to for years. Brad, I'm curious if any of the people you spoke to or any of the sources you had for this story talked at all about maybe migration changes as a result of this.
Where do they go?
You know, we didn't hear anyone say that they were ready to leave this area because of that. I think overall, the feeling is still that it's a favorable region of the country to live in. I think the sentiment is that some of that favorability is slipping away. Some of the advantage, the perceived advantage of living in this region of the country is changing as the cost of living catches up with the Northeast and other more expensive areas of the country.
Hey, Brett, just got under 60 seconds to go. Anybody, though, within the story, you tell the story so well through different individuals who live in Nashville and different areas in the South. Anybody who sticks out just quickly?
Well, I think one person who sticks out certainly is a woman who my colleague spoke with, Janelle Marte, who worked with me on this story, spoke with a woman who moved to the Atlanta area about 20 years ago. And she really, you know, she was a sort of regular, sort of middle-class worker, got here, and her daughter was maybe 1 year old at the time. Her daughter's now grown.
Right.
She's done a terrific job. And now she says, like, gee, I can pay my bills, but I'm not sure that I can do anything else at this point. And you hear those kinds of stories, I think, over and over in the region.
And that's a tough way to live. That's for sure. Hey, Brett Pulley, thank you so much. Glad we could get some time with you and bring it out to the Bloomberg audience. He is Bloomberg News Atlanta Bureau Chief Brett Pulley, joining us there in Atlanta. Check out the story. It's on the Bloomberg and at Bloomberg.com.
Hey, Redhead crossing the Bloomberg terminal. Millennium Management is preparing to raise billions of dollars in new cash to tap investors' demand for multi-strategy hedge funds.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are coming up on the last hour of trading here on Bloomberg Businessweek Daily. Carol Masser, Tim Stenovec, live here at Bloomberg headquarters in New York City, bringing up the trade on my Bloomberg. And you've got investors buying into the last hour of trading here as they get ready to wrap up the second quarter and the first half of 2026. What does it mean? S&P 500 up 0.8 of a percentage point. I heard Charlie talking about it earlier about a record on the Dow Jones Industrial Average, up 168 points, up 1/3% for those that are interested. And then I'm looking at the NASDAQ 100 up 1.7%. I don't know if we're at records on any of those. I forgot to check.
Well,
nope, not on the NASDAQ
okay.
100.
She's going to keep going, and I'm going to talk about some of the other things that are moving. In the S&P 500, 230 stocks are advancing, 272 are declining. What were you saying?
No, I don't think.
No other?
Neither the S&P or NASDAQ.
Okay. When you peel back the layers of the S&P 500 and you do see what's moving higher and what is moving lower, there's actually a lot in the red despite the move to the upside of 0.8%. Real estate, consumer staples, and healthcare are all lower. Technology, industrials, materials are all in the green.
You know it's doing really well today?
What is doing
Stocks
really well?
up more than 4% here, and you're looking at that index just on a tear. We've been talking about it, up 101% year to date. But you look at the quarter run. I mean, it's the best that we've seen, I think, in something like 6 years, right? So it's up 88% in the quarter.
Okay. We'll see if Jess
That is
Menton
cray.
brought any socks with her stocks.
All right, so let's bring her in. I'm Carol Master, along with Tim Stanovic. Let's get to some stocks on the move for you on this Tuesday. With us, of course, is Jess Menton, and she, of course, is
Bloomberg News Deputy Team Leader and Senior Reporter. And I think there's a third title.
It's
There might be a
okay.
third
You have
title.
a lot of titles.
I don't
there
expect
too.
you to know all of them, Carol. It's
She's
fine.
a big deal, and she knows everything. And while we were going through, I'm like, record. She's like, nodding, not nodding. Like,
Yeah.
She knows. You can just ask
I didn't
her.
want to jump in, but I was like, no, not a record yet.
I know. I was like,
the last record was June 2nd for the S&P 500.
That's why we love you for many, many reasons. Okay, stocks on the move today. Where do you want to go?
Well, of course, you were just pointing out what happened with the stocks on a year-to-date basis, so I have to highlight once again what are the bright spots today. So this time, of course, the chip space again, but specifically chip tools. So KLA Corp, the ticker is KLAC. You're looking at that stock up 9%. So best day, checking notes there, only since June 29th, but I have to point out the run that it's been on over the past month. I mean, it's on pace for its best month in almost 40 years and up around 150% this year. So that'd be the most since 1999. So what happened here is what's going on with South Korea with the investments with Samsung as well as SK. So there's over $500 billion that they're trying to invest specifically with AI chip production. So you're seeing those chip tool stocks like KLA rallying on the back of this. And then, of course, you also have other stocks that are exposed to those corners of the market, like Applied Materials, and then ASML. It actually finished 7% higher in Amsterdam today, so that was actually another record there. So, of course, looking at what's happening with the stocks year-to-date basis, Wall Street still pretty optimistic, specifically for chip tools. So last week we were talking so much about memory stocks with Micron as well as SanDisk, but today we're doing the chip tools. So really, if you're looking at UBS Group, they're still predicting a total of chip equipment market would hit around $250 billion in 2028, and you still have JP Morgan optimistic on that, as well as Susquehanna. So Wall Street's still optimistic specifically on these chip tool makers.
SanDisk and KLA are top gainers in both the S&P 500 and
Very
NASDAQ
different
100
parts
today.
of the stocks ecosystem.
Totally, but interesting, right?
And
to
then
see.
there's days where you'll see the stocks up a lot, but today it's mostly because of those chip tool stocks. So you're looking at KLA, ASML, as well as Applied Materials. If you look over today and yesterday, those are what have contributed the most to the gains in the stocks.
All right. Zimmer Biomet. Also on your radar
unfortunately,
today.
you were pointing out some of the rate-sensitive corners of the market if you're looking at the IMAP function. So healthcare is one of those, that sector down close to around 1% today. So some of that has to do with those medical device companies. So if you're looking at Zimmer, the ticker is ZBH, down about 6% on pace for its worst day since April 28th. So medical device company, among the biggest decliners in the S&P 500 today. So Cleveland Research, this is what's hurting that stock, published a report citing disappointing orthopedic market trends. So you're seeing that stock's pressured, as well as another peer of it is Stryker Corp, SYK, down about 5% today on pace for its worst day since May 1st.
All right, let's finish up with AeroVironment.
Yes, so that is the ticker AVAV. It's actually up 18%. So that's its best day since May 28th. If you look at a year-to-date basis, though, still down about 32%, even with today's gains. But this is a drone maker, so it boosted its earnings outlook, and it's a defense company too. So its market cap is around $8 billion. So it's not in the S&P 500, but it is in the S&P mid-cap 400 as well as the NASDAQ composite. But it is looking as far as that strong revenue forecast for 2027. That's what you're seeing really supporting that stock, and it beat across several metrics here. So because of the defense budget with Trump, and we're seeing the Defense Department around something like $75 billion as far as reinvesting that into drones. That's why, even though the stock's down pretty heavily year to date, Wall Street optimistic on the second half of the year for this stock.
All right, good bunch of stocks, and they are definitely on the move. Bloomberg News Deputy Team Leader and Senior Reporter Jess Menton joining us here in studio. Jess, thank you so much. Be sure to check out our Stock Movers podcast, 5-minute episodes, big winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
If you're sticking with us on Bloomberg Businessweek daily on Bloomberg Radio, YouTube, and Bloomberg Originals, we got a great couple of hours coming up. Talking a little bit about chip stocks, but also software stocks. The CEO of Progress Software, they report earnings after the close. They're joining us too.
All right, close coming your way on TV. This is Bloomberg.